Hey folks, my name is Dan Frio. I'm a mortgage advisor for over 30 years, and my goal on a daily basis is to inform and educate you guys on real estate and housing. So the most asked question that I get is, Dan, where are rates going to go and where are house prices going to go? Well, it's really hard to basically answer the latter part of that, because at the end of this video, I'm going to go through the biggest markets we have in the country to show you some markets are up 10% this year. 10%, where other markets are down 10%. And I predicted that at the beginning of the year, but I want you to understand the dynamics behind things. So I'm actually kind of applauding those out there that have been saying, the housing market's going to crash, and here's the fundamentals behind it. Because if you just look at all that on its face value, yeah, the housing market should really be crashing right now. Let's go through some of the things that we've had. So we've had, first off, you're seeing right through here, is the government just avoided another shutdown. We had this data coming out just about 3-4 months ago where the government was going to shut down again. That causes huge uncertainty for millions of people. If you're out there relying on a government job, if you're relying on Social Security checks, that will majorly affect your purchasing powers and what you foresee to do, in the future. The next thing is higher rates. Like I just said, right through here, we have the highest rates that we've seen in decades. So you couple that. Now, the other piece of this equation is student loan debt. Now, a lot of people are starting to join my bandwagon that I've been saying. I'm like, guys, there is so much student loan debt out there. It is the next bubble to burst. And when I come up with some of these numbers, people, I don't think they really understand how much of an impact the student loan debt repayments are going to be. So actually, CNBC posted a great article just recently, and it's October 1st. So I want to make sure you guys are aware of the timing of it. But if you go down through here, it says 40 million Americans are on the hook for new monthly payments of their student loan debt. But I don't know if you guys know the dynamics on how much this is actually going to be. So if you roll down to the bottom of this article, you're going to see it right through here. A lot of people are saying they're going to put off major purchases and start shopping at discount places to buy their goods and services. And here's why. The founder and CEO of R5 Capital, Consumer Research Consulting Group, estimated that starting in October, around $7 to $8 billion per month will be reallocated to student loan debt. So let me put this in the context. Reallocated. Well, a lot of this money some of it was being saved. We saw in the consumer disposable income that people had the most disposable income ever in 2020 and 2021. That has lapsed. That has really pulled back. And now when you start having this, which you're going to see about $7 to $8 billion a month now instead of going from goods, services, shelter, and leisure, it's now going to go to student loan payments. So I don't know if everybody anticipates or anybody even has a fathom on how much $7 or $8 billion a month is going to be. So I'm on the sideline saying, hey, Fed, you guys have to understand the dynamics behind this. I know you want people to stop spending as much as they are because you're like, okay, the consumers are spending way too much still. This is going to take a huge bite out of that. So the next thing I want to do is, this is some information that might be shocking to you guys. If you're a first-time viewer of my channel, a lot of people say, okay, Dan, you're rah-rah, or you're cheering the real estate markets. Well, I do have some reasons to cheer. Look at Hartford, Connecticut, Milwaukee, Wisconsin, Virginia Beach, Virginia, Philadelphia, Pennsylvania. Those are up. This is so far this year. It's up. Hartford's up 10% this year. However, you're going to say, well, Dan, markets are crashing too. Well, yes, they are. So you go down through here and you have Austin, it's down 11%. That's the biggest decline. New Orleans, Phoenix, Las Vegas, San Francisco, Sacramento, all those saw just huge appreciation in the last 2 or 3 years. So a give back of 10%, isn't that much out of somebody's, equity. But you're starting to see, again, on the flip side, you also see values coming in. Let's say the norm up through here is about 4% a year. You go down through here, and this is about a negative 2%. So the markets are basically flat, and I called that at the beginning of the year. So I understand where people are saying, we should have a housing market crash based on this data. But the one piece that a lot of people don't understand is basically just economics 101 is supply demand. Okay, so to have a price of a commodity, especially in what we talk in this channel, real estate, to have the price of something just crash, what do you need? Well, you need the perfect storm that we just went over. Plus, you need a huge supply of something hitting the market. When you have a robust supply of anything hitting the market, that in turn is going to cause house prices to drop. Okay, so everybody has the context of, well, back in 2006, 2008, the housing market crashed crashed because house prices just skyrocketed. Well, there's a lot more to that story that you guys need to understand. And we'll post that in videos upcoming. And we're also hosting a lot of live events. Me and Kyle Seagraves of Win the House You Love, we have partnered up again that we're going to do videos once a week to answer all the questions that you have out there in regards to buying your first house, maybe buying your first investment property, or at least asking us questions to say, you might have a specific question that you would like answered by me or Kyle Seagraves of Win the House You Love. So with that, information that we have out there, I understand where a lot of people are saying, okay, I'm not going to buy right now because the housing market's going to crash. I don't think the housing market's going to crash, and you have that data here, but I don't think affordability, hopefully you're in a position to be able to purchase a home, because home ownership does build equity over time. It's not one of those things that you're going to jump in and get a 10 or 20% return on that a lot of people have seen in the last couple of years. We're going to go back to historic averages where you usually see about 3 to 5% appreciation a year in housing, not this 10, 20, 30% robust appreciation that we've seen in the past few years. So that's that report. So let's get to the economic calendar for this week. I'm going to start lessening my daily reports on the economics and just come out once or twice a week with my economic data, because we're looking to do more and more live events to answer those questions that you guys have out there. But the economic calendar that we have today, this week, is basically manufacturing and the employment numbers. Now, a lot of this stuff is going to get skewed because there are so many unions out there on strike right now, but let's just basically look at the data that we have for today, and I'll give you my analysis on where I think things are going to be going. So right now we're going to have the manufacturing indexes coming out that's going to show, I think, manufacturing starting to really slow down, especially when, like I said, all this perfect storm stuff really starts to hit people's pocketbooks. Then on Tuesday, we have the JOLT index. What the JOLT index is how many job openings there are. So the more and more and more job openings there are, that means the people that are looking for a job have a lot more flexibility. They can pick and choose where they want to work, and they can also demand higher wages. When you have less and less job openings, that means the employer is a little more strict, and they're not going to be willing to negotiate your wages as much as they were in the past. So that's another dynamic that we're going to see. And then on Wednesday, we have the ADP payroll numbers, the manufacturing numbers through here, oil inventories. Thursday, we have initial jobless claims. I'm thinking that they're still going to be flat unless a lot of these people that are on strike right now start getting reported as unemployed. But just California just came out over the weekend and said that they will not allow anybody that's been striking to file unemployment claims. So that is a huge hit to those out in California that are on the picket lines that we're seeing right now. And then on Friday, we have some hourly earnings. This is one of the areas that the Federal Reserve looks at. They're like, how much more money is people making? Because if we have a ton of people working and they're making more money, they're going to continue to spend. But again, I think what they're missing here is right through here, where the student loan payments are going to take a bigger chunk out of people's wallets than they think. So where are mortgage rates right now? Here's where they ended on Friday. They were down huge on Friday, which is fantastic. People were anticipating what the federal government's going to do. Were they going to work out a plan or not? Well, they kicked the can again, and they're pushing everything out another 45 days. So you're going to hear this, hear this data another 30, 45 days, and they'll work out something at the last minute like they always do. So based on the information we have so far today, what are the bond markets doing? Because we want to take a view of where are rates going to go today. So what I follow is the bond market, because mortgage bonds, which you're seeing right here on your screen, we can follow these to see exactly where mortgage rates are going to go. We don't follow the 10-year Treasury. We actually follow the MBS market. What you're seeing on your screen right here is mortgage-backed security bonds that are trading on Wall Street. They are down. The price right through here is what you're seeing. The price is down 27 ticks. That means when a price of a bond goes down, rates or yields go up. So we're going to pick up probably about 10 basis points in rates. So this rate's probably going to go back to 7.5% later this afternoon. But in the morning, usually these are really volatile. So we'll continue to monitor those for you. But if you're out there and you're like, Dan, I'd really like to talk to you or one of your mortgage advisors to see, can I qualify for a house in my position? Is my credit score good enough? Does my income, is it sufficient enough to buy my first first house, and how much do I really need when I'm buying my first house? So we would love to help you with that. Or if you're looking to maybe buy your first investment property, I have a lot of people actually reaching out to me to buy their second homes. But we have a slew of people out there saying, Dan, I got a ton of debt, I have a ton of equity in my house, and I would like to basically jump into that and pull out some equity in a more efficient way to pay off some of these bills. So we can offer you also home equity loans. So to start out, all I need you to do is click over there, the Apply Now button. It's going to be unique. You're going to answer a few questions. Based on how you answer those questions, you'll be routed to a specialist that specializes in exactly what you're looking for. But if you're out there and you're like, Dan, can I just call somebody or maybe just talk to you via email? Well, absolutely. You can give us a call, 844-775-5626, or you can email me personally, and this is my personal email for sure. It's dan@therateupdate.com. Thanks so much for watching, guys. God bless. I got one challenge for you today. If you would, please, if you haven't subscribed yet, please subscribe to my channel so you get an alert every time I post a video. Take care, guys. I'm going to be live today with Rick Mahone. He's a realtor out in Arizona to talk real estate. So check us out. We're going to come out at 11:30 West Coast, 9:30 here in the East Coast, or I'm sorry, in the middle of the country, and 8:30 in the morning. I probably have all this screwed up, but check my channel. You can check out my live streams coming up today and coming up this week. Take care. Hope to hear from you soon. Bye-bye.